Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the day's trade. We'll give you a wrap-up of how the day's trade has panned out so far and what do we expect for the markets going forward from here. We'll get you the expert voices as to how should you be approaching your market investments right now, the pockets that you should be focused on and the investments that you should target right now. But first up, a quick check on how the markets are doing at this point in time. First, a look at how the benchmark indices, Sensex and the Nifty are trading as we approach the closing hour of trade as well. Now, when we look at the Nifty right now, it's hovering about 18,089. That's down by 166, 167 odd levels, almost a percent cut. So the markets have drifted towards the lower point of the day. Also, the Sensex are now seeing a cut of 625 odd points, 61,121. The current level over a percent cut for the Sensex as well. So that's clearly a pressure point for the markets again. Broader markets, let's look at how they are performing in trade as well. The Nifty Bank clearly under pressure. We have been seeing that the financials have been the big laggards through the trading session today. The HDFC Twins, IndusInd Bank, you can actually see a whole host of pressure on them, over 5% cut for all three of them right now on top of your screens, and these are the top market losers as far as the Nifty 50 is concerned. Hindalco, Tata Steel, UPL, the other laggards at this point in time. But just like how I was pointing out, it's the financial services, the Nifty Bank that's now down by 2% and within that 1.5% cut for the financial services. The private banks even worse by 2.4% down in trade. PSU Bank, still the better of the lot, is seeing a cut of 0.6%. Apart from this, you're also seeing losses coming in on the IT pack, that's down by half odd percent. The metals that are down by 1.2% odd as well. Pharma seeing some cuts in today's trade for sure. And apart from that, we're also seeing some cuts on the oil and gas space as well. What's doing well in an otherwise weaker sentiment kind of a market that we are in? Consumer durables are slightly doing better, 1.3% up in trade. FMCG stocks are slightly up and the auto stocks are also moving in the top gear as we speak, half odd percent up in today's trading action. But let's welcome our guest on the show. Vaishali Parikh joins in. She's the Vice President at Prabhudas Leeladhar. Welcome, Vaishali, and thank you so much for taking the time out for this discussion. Your own thoughts on how the markets have drifted lower today, the key concerns, and are these concerns that would continue to weigh on as we approach the new week after the weekend as well?
Hi, Sakshi. Thanks for having me on the show. Yes, actually, see, it's not really a concern, but we have seen a good run up, right? From 17,200 to nearly 18,400, which was anyways a resistance band. So today's corrective move, which we are not really used to, well, it calls for further correction. And of course, the main triggers came from HDFC Twins, and now look at IndusInd Bank. So
Yeah.
overall, banking sector per se for today has been really contributing to today's fall. And I think this fall can continue as long as 18,000 levels are held on, it's okay. But if we see 18,000 breaking, we can see further downslide coming to 17,900. But yet, this would not be a damage to the trend. It is just profit booking for now.
Okay, let's look at a few pockets that are at least buzzing in action today. The auto space stocks are actually doing much better than the other rest of the whole market today. We're seeing some moves coming in on the two-wheeler spaces, especially the stocks like TVS, Motor, Hero Moto Corp as well. And we're also seeing some move coming in on the Bajaj auto counters as well. How are you looking at the two-wheeler space stocks right now? Is there any kind of a reason why they are, showing this kind of a bounce, and can it be sustained on the upside?
I would say so because in a volatile market right now, it would always be better to keep a stop loss. The trend is very much intact. TVS Motors also post good results. It's holding on to the higher levels. So I would say keep trading stop loss and right through the journey. And well, if we break crucial support levels, then we know that yes, this too can get into the profit booking mode.
Right, exactly. On Hero Moto versus say TVS Motor is what I wanted to understand a little bit more. Now there's a clear divergence if we look at the last 1 year or so on how Hero Moto Corp has performed versus what TVS Motors has done. TVS Motors was definitely the star performer of the year gone by, but the last quarter there was a complete reversal in the earnings performance for Hero Moto Corp. Strong operational numbers is what we have seen that have driven the raw, that was driven by the raw material costs that have drifted lower. Now, there were no negative surprises in the numbers. For TVS, it's been a contrast right there. Is it the time to switch out of TVS to Hero?
So chartically, yes. Hero has still a lot of upside potential, but what we really witness in today's market is the strong charts remain strong. But well, I would say one should make a position in Hero as well.
Okay, understood that. And what about Bajaj Auto? Will that be at all in your preference list?
So Bajaj Auto also has run up quite a bit. So let's wait for a decisive new round of momentum to set in. Right now, it is in a consolidation phase. So I would say if you have to get into the trade, the near-term stop loss should be kept at 4380, and let's see if it takes on from here on.
Okay, for Hero Moto, what's the upside that you see and the levels that you may be watching out for?
I'll just tell you.
Sure.
So, Moto currently at 2550, and it's getting into, it's in the process of making higher bottom, higher top. So I would say, well, 2470 should be the support. And once we see a clear breakout about 2570, and once it sustains about that, then we may say that yes, the stock is ready for a target of 2600 and higher.
Okay, understood that. So that's all about the auto space stocks and the two-wheelers that should be on your radar as we speak. There is some kind of bounce that we are looking at. Of course, these stocks are also in focus amid the earnings as well. Now, apart from this, one more pocket that is buzzing is also the oil and gas space. I mean, we have been seeing that the oil prices have been drifting lower for the third consecutive week. There are slowdown concerns, turmoil in the US banking space that have actually led to some kind of a decline. We've been seeing that WTI crude has slipped below $70 a barrel as well. How should one look at this play in the Indian market? Of course, lower crude prices always augur well for a country like ours, which is an oil importing nation. But how does it really pan out in terms of an opportunity for investors?
I would say, well, ONGC is having a very good, strong trend. So, if we are correlating this with crude, I mean, I would more look at paint stocks. So, today we
Okay.
saw Asian Paints and Pidilites, they are all related to crude. So, once crude goes down, these stocks are going to benefit, and we saw a good run up. But yes, having said that, I would also look into Reliance. Reliance is doing very well. And along with that, my focus is also on IOC and HPCL. So all these stocks should do well in days to come.
Okay. Now I wanted some views on some of the stocks that are in focus, individual news flows and the kind of reaction that they have seen in today's trade. Now let's talk about, for example, a stock like Federal Bank, for example. Now we've seen the numbers come out. The stock skid about 7%, and that was despite the strong set of numbers that we have seen. If you track this stock at all, could you list out for us what is the chart looking like for Federal Bank, and what would you advise investors to do?
Well, so I would say because overall banking sector has been very robust, and
Yeah.
we believe that it will continue to stay very well. So Federal Bank, if I would say, it has come back to its crucial support of 125, 127. If you see in the recent past, on several occasions, there has been a very strong support band between 124 and 127. Also, the second thing that one needs to observe is that currently it's at a support of a 200-day moving average. So I would say there's no harm in buying the stock
Okay.
at lower levels at 120.
Okay. Another stock that is in currently coming up on my charts is on my screen is also BHEL. This is perhaps leading the losers league on Nifty 200 as there is some profit booking. The stock also slipped about 7% odd or so. Your own thoughts on BHEL? We did see that, in the last 1 month, the stock really performed very well. In fact, we had seen about 19% of a surge on the stock in the past 1 month. But today, there's a decline of over 6% that I can see even today at 80.85. How is BHEL looking to you?
So there is just a profit booking. There's no damage to the trend. My view
Okay.
would get negated if we break 78 levels. So I would say continue holding if one has to, or buy near 78 with a support of 78, because that would make a very favorable risk reward ratio.
Right, right. Now, Vishali, we've been seeing a whole host of sectors report their earnings, starting from IT to banks. We've been seeing even some, FMCG companies report their earnings as well. Cement majors, Adani Group came out with its earnings as well. How have you made sense of the kind of earnings that have come about so far? Any particular trend that you've spotted in terms of the sectors that are perhaps doing better in this earnings season?
So I would say, well, of course, cement counter, first of all, Ambuja. Ambuja is looking very promising from here on, and I think that is a good buy. And even if one has to be a risky, because I would say risky because Adani Group is very vulnerable to all the news that we witness. So I would say, but purely on technical terms and with discipline, Adani Port is worth having a look, keeping in mind 650 because it has been consolidating and taking support on cluster of moving averages. So
Okay.
strict stop loss of 650. This stock, once it gets into momentum, we can see 800 levels in days to come.
Right, understood that as well. So Ambuja Cements, that could be something that should be on investors' radar. Apart from that, too. Apart from this, are there any particular sectors from say metals pack? The metals have been showing some kind of bounce in the previous week gone by. Is there any structural move that you are able to spot here?
So I would look at Jindal Steel and Power and JSW Steel. Hindalco did make an attempt to give a breakout. So once there is a clarity, we see a move above 445. I would say it's a buy.
Okay. And how do you make sense of some of these FMCG majors? We've been seeing that the ITC stock has been continuously moving higher. And, versus that, if you look at the kind of numbers that are coming about, Nestle reported very good numbers that surprised the street despite a challenging environment. Dabur, on the other hand, did disappoint on some fronts as well. From the consumption basket, any particular stocks that are coming up on your radar?
So I would look at Nestle, which is an all-time favorite. ITC, buy at every decline. And of course, the third stock that comes to my mind is Britannia. I do like Britannia even at these levels, and I think it should do well.
Okay, Britannia will definitely be in focus amid the earnings as well. So that's going to be another preferred stock, 1% up for the company, 46.28, the current levels for this stock as well. But you talked about the banking stocks briefly, and I wanted to talk about how today we were discussing in the initial part of our conversation how financials have been, the pressure points for the markets today. The Nifty Bank dragging about 2.2% odd, and that's with regards to the kind of fall we've seen in the HDFC Twins. We've seen almost over a 5% cut for both these stocks. Would you recommend investors to really look at this dip to accumulate all those existing investors?
Actually, HDFC Twins have been the outperformers all this while because of course, the news and all. But now I would also look into SBI and ICICI because they still show good upside potential. So I would say, along with HDFC, we don't know. I mean, most of the rally has been taken care of. But now I would look at SBI and ICICI.
All right. Well, thank you so much, Vaishali, for being with us on the show and
Sure.
discussing all these stocks and sectors and helping all our viewers understand what the strategy they should be adopting on these numbers going forward from here. Let's look at the markets also. They're drifting further lower as we inch closer to the end of the session today. We have about 15 minutes away from the session, and you can clearly see that 685 points of a cut can be seen on the Sensex. It's now coming closer to that 61,000 mark. Similarly, for the Nifty, inching closer to the 18,000 mark as well. There's a cut of 180 odd points. Both the benchmark indices are down by 1%. The bigger dip is coming in on the Nifty Bank. That's now down by 2.2% odd, and that's the biggest factor for the markets drifting lower in today's trade. Let's keep an eye out on how the markets really end today's trading action. But definitely the trend remains in the positive zone, as Vaishali pointed out, that there is going to be still the markets going in the upward trend as we approach the new week as well going forward from here. But we'll continue to track all the market momentum for you, and you can do that too by staying with us on Business Today TV. Don't forget to subscribe to this channel and also continue to stay with us on our other social media platforms as well to track all the news from the world of business and stock markets.
It's a once-in-a-lifetime opportunity for the more than 20 crore employees, government or otherwise, covered under the